Hello everyone, welcome back to solving the market mathematically. Remember, remember, market is working with real-time data, and whenever you see anything to do with data anywhere, just know there are mathematical formulas which are used to 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 blah 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 blah. So 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 let's say, let me give you an example. We are trying to track the market algorithm mathematically, because if you have time, you have price, and you have candle language, then you can track the market algorithm mathematically. You won't be 100% accurate, but you can 90, but there is a 90% chance. If you learn this well, you can be able to track the market algorithm mathematically, because the algorithm moves based on the real-time data, and then you can use the past data and track the market algorithm mathematically. How do we do that? First, you learn time. Second, you learn price. Third, you learn candles. Fourth, you learn math equations. You just have to come with the most closest math equation to what is running the algorithm. So you can't track the algorithm using candles. You can only track the market mathematically. You can master candles, you can master candles the way you want, but do you know how the real market moves? And the only way you are going to know how the real market moves is tracking the market mathematically. That's the only way. So this is today's date 16. So I will be working with yesterday's data, which is date 15th. So if I take now listen, this is the key point. Now you have a 4-hour candle. A 4-hour candle has 270 candles of 1 minute. That is the basic number one. We are trying to get the expansion of a 4-hour candle. If one 4-hour candle has, you see this is a 4-hour chart. This is a 4-hour candle. This has 240 1-minute candles, because if you take 60 times 4, you're getting 240 candles, not 270. This another candle here has 240 1-minute candles. This has 240 1-minute candles. So out of this range, out of 240 candles, which makes this 4-hour candle, I only need you to hunt 100 candles per every 4-hour candle, and make sure you are right. If within a 4-hour chart, within a 4-hour candle, high, low. From here to here, let me enlarge now you can see. From here to here is 241 minute candles. Same as from here to here, they are the same 241 minute candles. I only need you to get every 4-hour candle, try to get only 100 candles to go on your profit side in the 1 minute time frame. This is what I'm saying. I moved 1 minute. I will label start of a 4-hour candle is 8 a.m. There. And the other 4-hour candle opened here. Opened where? 4 p.m. 4 a.m. not p.m. There. And the other one is 8 exactly. There. And the other one is 12:00. 12. Remember, a day has 6 4-hour candles. 6 of them. And every 4-hour candle has what? Has 241 minute candles. Now from here to here is 240. From here to here is 240 candles. From here to here is 240 candles. Now let me take you to 4-hour chart yesterday. Now you can see yesterday was where? Here. This, you see this candle, this one, this big 4-hour candle, this one, from here to here is 240 candles. And that candle is where? From here to here. So if you aim 100 candles, that means from here to here it's 100 candles, and the other 140 candles, market went into consolidation. So this is what we are trying to hunt this expansion of a 4-hour candle. This is the expansion of this 4-hour candle. This one, that one. The next 4-hour candle, it had 2 good expansion. It had this one. This was an expansion of that 4-hour candle, and this one was the major expansion of a 4-hour candle. If I go to the next 4-hour candle, you will find most of that candle was consolidating, but where is its expansion? Here, from here to here, and then its main expansion was from here to here. So this head to expansion, the only way you could have made money trading that 4-hour candle, even if you were scalping, number one, if you buy here, let's say if you buy here that day, you were not going to lose money. If you just this 4-hour candle, all it was required of you was to buy here. Now tell me, why are you entering more than 2 trades per 1-hour candle? Per 4-hour candle. Every 4-hour candle open, you're only supposed to enter 2 positions. You can see buy, market bought that 4-hour candle, the whole of it. Can we see that? And then the next was consolidation. So if you try to sell here, you will try to overhold and nothing will be happening. Now the next 4-hour candle, you need to predict its high. Sell here, buy here. That 4-hour candle, you were supposed to do that. This one, you were supposed to buy here, sell here. Buy cheap, sell high. But we are using a four, like we are being guided by the 4 hour time frame, but we are on the 1 minute time frame. Open a 4 hour candle, it's high, it's low, you're seeing there. Now after this candle, it's high, it's low. Can you see that? This high, this low, that is a 4 hour expansion, a 4 hour candle expansion, a time based 4 hour expansion. 240 candles, 10, just know 240, 241 minute candle, this one. Then you can use that to try and predict where, now in this 4 hour candle, where do you see, where do you think market will go after the next 4 hour candle open? First, think it's either moving to the next 4 hour candle high, or the next 4 hour candle low, or the next 4 hour candle midpoint. High, low, and midpoint of the previous 4 hour candle is where you should be watching putting your eyes there. Now, let me show you another thing now. Now, this is the 8 a.m. 4 hour candle. 8 a.m. 4 hour candle. From here to here, this is a complete open of a 4 hour candle, close of a 4 hour candle. 240 candles. That is a range. This is a 4 hour range. This is a 4 hour range. Now, in 1 minute time frame, you use the 4 hour candle as your range. Are you getting that? You know, people, I see people trying to, from here to here, this is a range. No. You will never know a true range. And this might be a range, but you will not be very sure. But if you use time to know where the range is, just mark the opening of a 4 hour candle. It's close, it's high, it's low, that's a range. It's midpoint, very key. Are you aware of that? Now listen now. Listen now. After now, you are aware of this. This is how your chart should look like. A 4 hour candle, a 4 hour candle, a 4 hour candle. Now, you are trying to predict this low. We are trying to predict this low, and we are trying to predict this low, and we are trying to predict maybe this small high here, small retracement, why it happened. You should be aware of that. Can you sell here? Can you buy here? Can you buy here? Can you sell here? Because if you do any other stupid thing, you're trying to buy here, you're trying to sell here, you are going to lose money. Can you buy the exact point where that for the law of that 4 hour candle will form? Can you do that? Can you know if the market is like this? Can you know mathematically this will be the high of the day? Why? It's 5 p.m. First 10 minutes. I usually talk about that. Then, boom. Can you see the 5 p.m. distribution? This is the 5 p.m. First 10 minutes of 5 p.m. and then market reversing. It's not random. Why? Why is the high of the day being formed the first 10 minutes of 5 p.m.? In Kenyan time, that is. Market is mathematical, and the earlier you accept it, the earlier you start learning. This is pure data in form of candles. And the only way you are going to track the market is by coming up with math formulas which are closely or which can track the market algorithm. They are not hard because the market was coded by someone like you, even maybe someone who is more illiterate than you, and you can't track him, what he tried to do. Nah. And one thing I usually tell people is market is a live market. It's live. Like, if you want to fix your psychology in trading, this is what you do. It's a live market. Live market. Live. Meaning you don't know what is going to happen next. Like, it's like watching, let me use an example of football. Manchester City versus Chelsea. It's a live game. Let's say it's the 10th minute and the game is live. Nobody knows what is going to happen next because it is a live game. It is something which is happening now. Same to the market. It is something which is happening now. It can decide to crash from where you have entered your entry. It is live. You know, people think I live trade using live accounts. No, bruh. First, you need to accept market is live. Like, it is happening now. What you're doing is happening now. And if it is happening now, that means you have zero control. Like, I have from giving you Chelsea versus Man City. The game is happening now. It's live. It's the 10th minute. So you have no control of who is going to win. So if you use that analogy, you are going to risk manage. It's a live market. Even if you enter the trade, don't be scared. Anything can happen. Because you saw it happen in the past does not mean it will work again. And if you saw it not working in the past, it does not mean today it will not work. It is a live market. And the only way you can track a live market is now. Let's solve the market using maths formulas. This is why the big boss is here. I'm here. See here? Big boss is here. Now, we will start with the basics. 3, 6, and 9. 3, 6, and 9. Let's see if we are using 3, 6, and 9. Can we predict this exact law? Can we predict that exact law if we are using 3, 6, and 9? Now, put this here. I want to write solve market using 3, 6, and 9. You know, people say this is the cheat code to everything. 3, 6, and 9. Because if all the numbers they have a way of meeting to 3, 6, and 9. I will make a video telling you why is 3, 6, and 9 unique. Why the person who discovered 3, 6, and 9 like it's the fulcrum point for all the numbers. In other words, 3, 6, and 9. I will explain the deeper part of it and why you can use it in trading and still make money. 3, 6, and 9. First you add them. 3 plus 6. Everyone check your calculator. And my phone is shutting down. I don't know why. This is my calculator. I will only do this and leave. Calculator. 3 plus 9 plus 6, you get 18. It's 18. So you usually take the range. You see the range, it's high minus low. So what is this for chart? This for candle is the candle which opened 8 a.m. So I will just go. So 3 plus 6 plus 9, I'm getting 18. Let me just write 18 here. If you add them, you get 18. I don't want to forget. So from tomorrow I'll be using TradingView. 18. It's a bit linear than add, you get 18. I'm getting 18. Now let me just write 18 there. If you add 3, 6 and 9, you're getting 18. I'm getting 18. So I need to get this 4-hour candle range. This one, high minus low. The better way is you can mark it. It's high, it's low. You can mark it and take those points and take the difference. But big boss, I usually move to the 4-hour chart like this. Go to that 8 a.m. 4-hour candle, which is this, and basically it will give me its high. You can see high is 43.45, 43.45.38 minus the low, which is 4300.80, and the range is 44. So we come back to here, this tab, and we can say the range is 44. Range. What am I doing with these ones? What am I taking? Let me show you. I want to delete vitu nimeweka hapa. Delete. Range. If you take high and low, mbona nachukua hiyo? It's this one. Range is 44.58. Range, I'm getting 44.58. That is the range. Range, meaning the range between from this high to this low, I got 44.58 times 10, because for you to know the number of pips gold has moved, you just multiply by 10. So that is 445 pips. That range is 445 pips. It's 44, you just say 44.58, but volatility of gold, you usually multiply it by 10. So it has moved 445.8 pips within a range of 4 hours. So if that market has moved 445 pips, all you need to get is only 200 pips. So if you just buy here, you only need the midpoint and you get out. The whole range is 445 pips. So if you trade with 0.01 and you sniper sell here, if you sell here, you will blow the account. You can trade gold with $10, because after that market moves 100 pips, your account is blown. Even the 440 pips with 0.01, that is $40. that means you can trade gold with $100. But anything less than $100, bro, you're lying to yourself. A range of 4 hours is moving 445 pips. You want to trade with $10, unless now you are super sure the exact law. This one, if you can predict here, predict this high, predict this high, predict exact this high, predict exact this low, then bruh, you are good to go with $10. Trust me, you can do that with $10. But if you can predict the lows and highs of every 4 hour candle, then just shut the fuck up and get out of. Go find money. You need money to trade. You need money to hold over drawdowns. Because I read a book, Psychology of Money. Though I don't like the book, it's overhyped. I don't see the point of it, because I'm the big boss. You're not telling me what to do. I don't read what I want. You guys. Okay, it's good to read the books. Go read the books, but don't make the books control you. I see guys reading a lot of self-improvement books, and in a way they start reshaping their lives to what they read from a book. Maybe that book was written by just a man sitting on a bed sitter because he was hungry, and he wanted to make money, and he said like, oh, let me teach people how to make money online. He came up with the Psychology of Money, and the book oversold, and everyone trusted that, and that's how a cult is created. Read the books and make sure they ain't controlling you. Even if you have read the Trading in the Zone, I have read them. I have read the Market Wizard. I have read all of them, but it all comes down to me. I know what the book they are saying. Even if you read the discipline, just be aware of the knowledge they are talking about. But if you feel it's good, emulate. But if you feel the books will try to make you too perfect, and this market does not want that. It wants someone who is able to allow room for errors. You want to be the perfect man on the world. Yeah, this is big boss. I like being perfect. But this is big boss, and your name is Kimani. So there is a very big difference between a big boss and a Kimani who is trying to become a big boss. I was a Kimani before, but the problem is I never allowed anyone or anything I read from anywhere to control me. I was always trying to be. I read the books, how to be a better man, how to do this. I read them, but I had to create the big boss personality. The big boss personality. So if you're learning from me, just know either way, I will have a direct effect to your trading. Direct. I will affect you directly on how you trade. So I couldn't allow myself to create a personality from what I read from books or read Atomic Habits. If you want to read this discipline book, I was never, and I will never do that. I read all of them. I know what they're talking about, but don't let them control you. They will kill the inner child inside you. Okay, now let's move forward. Why do I talk when I'm teaching? Because your patience, it's what we need here. patience to listen to the boring stuff, patience to sit and listen. Listen. You are not rushing to go anywhere. You are not rushing to make money quickly. Patience to create a personality. Do not come to trading with the Kimani personality. No, you have to kill that. Create a personality which, even if you lose 1000 USD, you are not affected, because it will come a time after you become a profitable trader, then you will be making over 1000 USD, 2000 USD, 1k, even 10k USD. Then trust me, if you can make 10k USD, then high chances you will lose the 10 USD. But can Kimani personality you have afford to lose 10,000 USD and still remain calm? No, it can't. You have to create a trading personality, a personality for the real life. Your personality should your personality is what, like, your personality equals your results in the chart. If you shape your personality based on the books you have read, you're just like Kimani. Base your personality on your life experiences, what you think. Like, think for yourself. Sit in the charts. Say, fuck Big Boss, I am going to come up with my math formulas to track the algorithm, because Big Boss is boring. Do yours. Come up with your own math formulas to do this. The algorithm, the only way you can track the market algorithm is through maths. Now, let's go to the next thing. High, 3, 6, and 9. 3, 6, and 9. After we add them, we have gotten 18. We have the range. So, we are trying to predict this low. Now, how do you do things? Take 44, take 6, the middle number, which is 6. After I start teaching you how to use the daily codes and stuff to trade, then you will hear me telling you, take the middle number, which is 6, divide by the total, multiply by the range. So I will take 6, divide by 18, I will multiply that by 44.58, and I will get 14.86. And then I will come here. I will come there. I want you to take the closing price, because that candle closed bullish. If I take the closing price and I subtract that minus, if I take this 34.22, I'm getting 43.19. We are doing this together. 43.19. Where is 43.19? 4319.56. There. Now this is what I want you to check. I have taken 6, I have divided by 18, I have multiplied that range by 44. Like, I take 6, divide by 18, multiply by the range, subtract that from the closing price, I am getting 43.19. 4319.5, 4319.56 and 52. It's one and the same. Now I want you to check here. This now I was working with this 4-hour candle, this one. So I was expecting this next 4-hour candle to bring market where? Here. But they never brought the market there. They bought before the market came here. So market went to the upside. So that the next 4-hour candle, you don't know what to trade. Market never came here. But is it a key level? Is it a key level? Yes. I want you to check. After market tapped that level, we have calculated. Check. Can you check? I want you to check here. 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 Leave along today. Can you see that's the first tap of that level? Tap, bank orders were there, and market retraced back. Tapping the exact point and market moving back. Because this is 19, market went back for like how many pips? 19 and 27. No, there, 28. So that's around 90 pips. Tap, move back 90 pips. So the question is, if this market moved down to 4319 during this 4-hour chart, just know market could have bought from here till boom there. Mm-hmm. 13. That is what basically happens. 3 6 and 9 on the real time. This was yesterday. Most of the time the next 4 candle is what hits there and then market moves back. If you take 6 divide by 18, you multiply by the range minus the high 43 45, you are getting that. You will get 4330.52. So 4330.52 is around here. Instead of using closing price, if you use the highest point, that is around here. That is around there. But that does not make sense, because you can take the range minus the low. You have the range and then you're subtracting from the high. No, you subtract from the closing price or the opening price. Now the question is, it's 19. Now because you are learning, you are using all the option. Subtract the low, subtract the high, subtract the close, subtract the midpoint, all of them, because you are learning and you need to create your own thing. This is 3 6 and 9 on real time. Can you see? Tapping exact point and then market buying. And that is how you use 3 6 and 9. You can basically use it with any 4-hour candle, but mostly I prefer using it with the 8 a.m. 4-hour candle. 8 a.m. 4-hour candle. Now we can even go to the previous day and see. Let's come here. Previous day. so that we can have enough data back tested. Previous day is here. Previous day is here. Between 8 a.m. Where is 8 a.m.? 8 a.m. is there. And where is 12:00? 12:00 is there. This is 2 days in a row using the same strategy and trying to check if I would be making money or I would just be kafukusi. Already we know when you add them it's equals to 18. So what you need to know is I'm just finding the range. High 4226.01. I'm subtracting 4170.13. I'm getting 55. I will multiply that by 6 divided by 18. I'm getting 18. What is the closing price? Now closing price, I have to go to that 4 candle and check. Date 11th, previous day, this one. Date 11th. Oh my ini date. This is date 12. So 8 a.m. Date 12. Where is date 12? This is date 12, 16. This is date 12. Yeah. Closing price, I will subtract 4219. Is it true? 4219.56. I'm getting 4200.19. And 4200 by itself, it's a key level. It's one of the key levels in the gold market. 4200. Can you see the first tap? First tap, market buying. First tap from the upper side, market always does that. First tap, buy. The other one went like 90 pips and reversed. Now this went to how many pips? Same 90 pips and went down here. Around 42. No, this has gone 140 pips. Yeah, because it's 4200 to 14. It has tapped that level -1. No, the 4200 level, the 3, 6, and 9 calculation, and then the first tap. I'm talking about the first tap. The first tap should move the market. The second tap, do not try to enter. First tap here, buy. And it's tapping within the next 4-hour candle. But the other one was a later bit. It lated. Can you see even this day how that market came here? You can see market went break to the upside, retest the same point, move upside, come down again, retest that point, like almost tapping it, and then moving 1,000,000 pips upside, 1,000 pips to the upper side. That is the power of 3, 6, and 9. For beginners, this is not easy for you. To see a chart like this compressed this way, I know it's a bit tricky. So where do you start? Introduction to trading. Start there. Move to the quarterly theory full course. Even if you are not a beginner, go to the introduction to quarterly theory. If you don't learn that, please, you won't understand. This is just the basic I'm teaching, and you can basically make money with 3, 6, and 9. A lot of it, you can see it. First tap, 3, 6, and 9. First tap, you have a guaranteed pips of 90 and above pips trading gold, unless otherwise risking like 20 pips. If it taps that level and moves away by 20 pips, then you are wrong. Get the fuck out of that trade. Are you seeing that? First tap, we move down. First tap, we move down. First tap, we move up. And if the tap is from the downside, I will do a video about that. Now, this is solving the market mathematically, episode 2. Why watch episode 2 and you don't know the introduction? Big bye.